Hey guys, I'm gonna work on the second part of the 4E video. So we're gonna start with question number 9, talking about Carla, how much she earned. We're gonna calculate the FICA taxes and go from there. So Carla is single. She earned $34,500 in wages. This is number 9. She earned $34,500 in wages. She also earned $750 in interest. Okay, so they want us to calculate her FICA taxes and her income tax. So two separate things. First, we're going to do the income tax since we've kind of learned about that so far. Then we'll calculate the FICA taxes. Then we'll add them together to get a total tax bill. So this is now taking everything we've learned so far and then putting it all together. This is what people actually do when they're helping you file your taxes, or this is basically what TurboTax does. So we have to use everything kind of on this sheet to answer this question. It's going to take a minute, so we'll go through it. First, we have to calculate Carla's gross income. And remember, going back to this flow chart, we start at the top. The gross income is any money coming in, right? So these are the two things she has coming in, so we can add those together. Go ahead and add them together. I got $35,250. So this is her gross income. Okay, then we go back to that flow chart, gross income, and we minus any adjustments to income. Remember, an adjustment to income is something like contributing money to a tax-deferred retirement plan, maybe some sort of a program that's saving money for your child's education. But you'll notice Carla doesn't have any of those. So the gross income in this case is also her adjusted gross income. Her adjusted gross income. They're both the same in this situation because she does not have any adjustments to her income. Okay, then they don't really specify it in this one. Well, yeah, they kind of do at the end. They say, assume Carla takes the standard deduction. So remember, going back to this sheet, the standard deduction for a person is right here, $6,350. So we'll subtract that, because that is money that she does not have to pay taxes on. What else does she not have to pay taxes on? Well, that's the exemption. Remember, so we'll subtract that too. Everyone gets a personal exemption that they don't have to pay taxes on. So we'll subtract all those, and I get $24,850. Double check my math, but you should get the same thing as me. This right here is her taxable, I think I need to secure this whiteboard a little bit better, is her taxable income. So this is the amount of money she must pay income taxes on to the U.S. government. So now we have to take that and we have to use it with respect to these tax rates. Remember, it says Carla is single, so we'll use the single tax rates here with this amount of money. And remember, we separated up into chunks. If you're not sure about that, go back to part 1 of this video and you can see there's an example in there. What number was it? I can't remember. It was number 5A, Sarah and Marco, and we kind of broke it down into chunks. So refer back to that if you're not sure. So she has a taxable income of $24,850. So remember, if you're looking at your chart here, if she's single, the first $9,325 is taxed at 10%. The first $9,325 is taxed at 10%. That'll give us $932.50. I'm running out of room. $932.50. Then that next chunk is taxed at 15%. So the way we figure out that next chunk is we say, okay, she's going to have, or she has a total of $24,850 in taxable income. So the money from here to here is taxed at 15%. So we'll have to find the difference. $24,850 minus $9,325 is equal to, I already did this out on my paper, and I got 15,525, I think is right. 15,525. If that's not what you got, double check with me, but yeah, adding this together looks right. And that amount again is taxed at 15%. So we'll multiply those, and I got $2,328.75. $2,328.75. So this amount of money is taxed at that rate, and that gives us this. Then this amount of money is taxed at that rate, and that gives us this. So we'll take this number and this number, and we'll add them together. This plus this equals what? I got $3,261.25. 25 cents. This right here is her tax bill. That's what she owes the U.S. government. This is her income tax bill. Let me specify. Her income tax bill. Okay, so there's two different types of taxes we're talking about in this one example. We're talking about the income tax and the FICA taxes, which is where we're going to go next. Can you guys hear my dog eating? She's eating her food right now. Sorry. Working from home probs. All right. So this is her income tax bill. So hang on to that number. We're going to have to take this and add that to her FICA tax bill. Federal income tax something, I think is what it stands for. So we'll add those together. So let's calculate the FICA taxes next. If you want to pause it here, go for it while I erase. We're still on number 9. We're about 2/3 of the way done. Hopefully you guys are doing okay at home. I hope you're all staying healthy, staying safe. I'm doing math right now in my sweats. I mean, you can't beat it, really. I know. In class would be better, maybe not in my sweats, but whatever. We're doing the best we can this semester. We'll get through it. Okay, so now let's talk about FICA taxes. If you have your paper here with the sheet and you turn it over, it's all listed right here. The big thing you need to know for this question is that FICA taxes are 7.65% on the first $127,200 of income from wages. Okay, so that only applies to wages, and it does not apply to anything else. So in Carla's example, she earned $34,500 in salary. That's the same thing as wages, money you're making at your job. She also made $750 in interest. FICA taxes do not apply to interest. In this case, it's only for wages. Okay, so when we're calculating the FICA taxes, it's that 7.65% on wages. Okay? So here comes my dog. I'll show her to you guys later. So if we want to make this into a decimal, we're going to say, okay, 7.65% of, wait, what did she make? $34,500. So that's the FICA tax for her. And it just comes off, let me make sure here. Yeah, and that just comes off the wages number at the beginning. So I know it's a little confusing, but for FICA taxes, it's that percentage on your wages. You don't take out any standard deduction, you don't do any exemptions, and it's just on wages. So the interest doesn't count. And we'll do an example later with something they call capital gains and dividends. That doesn't count in this example either, only your wages. You'll see a problem like this in my math lab, so I want to make sure we're clear on all the parts. You can still use the help me solve this, but for one of these questions, it's like 34 steps. So I'm trying to get you ahead of that before you need to use it. So what is this? You can calculate it on your calculator. Go ahead, type it in. got $2,639.25. That's for FICA taxes. And remember, we'll add that to, this is FICA, and then we'll add that to the income taxes from the last part that we did. Remember, her income taxes were $3,261.25. So we just add those together to get her total tax bill. And I got $5,900.50. And that should be the answer for Carla. All right. Just reading through this. Okay, so that's number 9. I'm going to erase and go on to number 11. It's weird. I'm so used to pausing and saying, does anyone have any questions or anything like that? But you can ask me questions on this thing right here. So let's do 4E. Now we're on number 11. I'm going to skip number 10. It's exactly like number 9. It was just for more practice. So we'll go on to number 11. Go ahead and read through it. You're single and you have a taxable income of $45,000, okay? You make monthly contributions of $600. Oops. $600. I'm just writing things that I might need down. You make those contributions to a tax-deferred savings plan. Calculate the change in monthly take-home pay when the monthly contributions are made. Okay, it's a weird question at first. The change, if you're contributing $600, you're getting that taken out of your paycheck. So you would think, okay, the change in monthly take-home pay is $600. Well, not exactly, because you are not paying taxes on a certain amount of that money. Since you're contributing $600 a month to a retirement plan, you're not paying taxes on that money. So a certain amount of that, I'm trying to explain this without it being confusing, a certain amount of that you won't lose, right? If you made $600, you'd have to pay a certain percentage of that to taxes. So in this case, let's use it with this, oh, it's just us, they're saying. In this case, we're making $45,000. So if we go back to our tax sheet here, we're talking about a single person making $45,000. They would fall, their highest tax bracket would be in the 25%, right? Because it only goes up to $37,950 here. So they would fall into the 25% tax bracket. So if you have $600 taken out and you were just, spending it, say you're just saying, okay, I'm going to go spend $600 on some new shoes or something. 25% of this $600, you would have to pay, you'd have to pay taxes on the entire $600, but that 25% would go to the U.S. government. Does that part make sense? So this is your money, but it's taxed at a rate of 25%, right? So if you just had the $600 just sitting around, you'd be paying how much in taxes on it? Let's figure that out. Multiply them. $150. Right, so $150 you'd have to pay to the U.S. government. But instead, you're putting this in a tax-deferred retirement plan. So you don't have to pay this in taxes. So you're actually saving yourself this much money. You're taking $600 out of your paycheck and putting it just into a different account that's still actually yours, right? It's still your money and you're still going to get it back. But if you were just putting it, into shoes versus putting it into a tax-deferred retirement account, you're going to save yourself $150, because if you're just buying shoes with $600, well, you still have to pay taxes on that. So you'd still owe this to the government. But if you're putting it in a tax-deferred retirement plan, remember, you don't have to pay this. So this money is still yours. So the way you can figure out what they're asking in number 11 is you subtract them. You say, okay, well, I have $600 that I'm going to not get taxed on. So usually you would be spending $150 in taxes. But since you're not going to get taxed on it, your monthly change in take-home pay is only this, $450. You're setting $600 aside, right? That's actually coming out of your paycheck. But usually you have to pay $150 on it in taxes. Since it's not going to be taxed, you're actually only losing this much money overall. Because if it was taxed, this amount of money would have never been yours. Does that make sense? I'm not sure. I'm trying to think of an even better way to explain it than that. It just made more sense to me a few minutes ago. Your tax bill, this might be another way to explain it. Your tax bill, what you'll owe at the end of the year, is reduced by this amount of money. So instead of paying this amount of money, this $150, you'll be paying $0 because you set that money into a tax-deferred retirement plan. I don't know if that makes sense. Hopefully it does. Let me know if it doesn't. Send me questions, and then I'll know you watched the video too. Send me questions. But what they're asking is, okay, instead of $600 and getting taxed on that $600, you actually get this back, right? Instead of paying taxes on it, you get this back. So your change in monthly take-home pay, it's really like you're only losing $450. That's number 11. Not 100% sure that that's going to make sense to everyone, but let me know if it doesn't, and I'll try to come up with a different way to explain it. Let's do number 12. Let me just check on the video real quick and make sure we're still going on time. I uploaded like a 20-minute, this is going on 20-minute video, and it took forever. Okay, let's talk about number 12. Dion earned $60,000 in wages, and Josephina earned $60,000 in all dividends and long-term capital gains. So two totally different situations. They're both single and they both take the standard deduction, okay? Calculate the total tax owed. So again, they want the FICA taxes and the income taxes and compare their overall tax rate. So I'm going to try to go through this one pretty quickly. A lot of it is similar to number 9, but then we're going to talk about kind of what the difference is at the end and maybe why. All right, I'm going to do Dion's situation first. He earned $60,000 in wages. Of course, to calculate we have to use this flow chart again to get back to his taxable income. There's no adjustments, but we're going to take off the standard deduction. We're going to take off the personal exemption. So his taxable income is $49,600. Okay, that's his taxable income. I subtract nothing here. I subtracted here. We got his taxable income. Now I'm going to use this chart and break it up into chunks. So the first $9,325, he's taxed at 10%, so that gives us $932.50. And then the next chunk of money is $37,950 minus $9,325, right? We're going to find the difference here, and that difference is taxed at 15%. That difference is $28,625. And that's taxed at 15%. Whoa. Okay, remember I said 37,000. Hopefully you guys can see this. I said 37,950 minus 9,325 to get this number, and that's taxed at 15%, and that gives me $4,293.75. Okay, but he makes $60,000 total. So now I need to get him into this bracket. So I'm going to say 60,000 minus 37,950 to get that next chunk of money. Again, if you're like, what are you talking about? These chunks of money, go back to part 1 of 4E and number 5A. I really break it down for you in there. The next chunk of money, the 60,000 minus the 37,000-ish number, will give us $22,050. And remember, that's taxed at 25%. And that will give us what? $512.50. So when we add these all together, that will tell us how much income tax that Dion owes. And it is $10,000 $738.75. Okay, so this is his income tax that he owes, whatever, income tax. Okay, so that's his income tax. That's fine. Let's add that now to his FICA taxes. Now you'll notice back on this side of the sheet, his FICA taxes are 7.65% on the first $127,000. Good news, he only makes 60 grand. So we'll just say 60,000 times 0.0765, and that will tell us his FICA taxes, and his FICA taxes are $4,590. $4,590. Those are his FICA taxes owed. So we're going to take this number, his FICA taxes, and add it to this number, his income taxes. Add those together, and you should get, so it's this, I'm trying to draw this nicely, plus this equals, I got 15,328.75. $15,328.75. I wrote it small up top. That is Dion's total tax bill. Okay? Be careful if in your example you find a person that makes more than $127,200, because again, on this back page of your flowchart thing here, you'll see above that income, their taxes are reduced a lot. It's only 1.45%. So if you have someone that makes more than $127,000, again, just be careful, because the second or the next higher chunk of money is actually taxed at a lower rate. I'm not sure why it is or who made up these rules or anything like that, but that's just how it is. Okay, so now let's talk about Josephina. She still made $60,000, but she made it in dividends and long-term capital gains. That will not change her income tax bill at all. So the way income tax works, it's all the same. It doesn't matter how you made the money. Remember at the beginning, we talked about how gross income was any money coming in. So for Josephina, she still has money coming in, and it's still equal to exactly $60,000. So her income tax will actually be exactly the same as Dion's. So the income tax for Josephina, I'll just call her Jose, will be the same as Dion's. So that income tax bill was equal to $10,738. And how many cents? 75 cents. Okay, so that's the same. Doesn't matter how you have the money coming in, she's still going to do the same thing. Subtract the standard deduction, subtract the personal exemption. We're still going to calculate it in those three chunks the same exact way. So instead of doing the math twice, let's just recall the number from Dion's. But her FICA taxes are going to be different. So this is when you're going to need to read through the sheet, and you're actually going to go towards the bottom section, because we're talking about long-term capital gains and dividends. So all of the income in the 10% and 15% tax brackets for only long-term capital gains and dividends is taxed at 0%. So for Josephina, up to, now I'm going to go back to my front page. Remember 10%, hoping you guys can kind of see this, 10% and 15%. So for Josephina, up to $37,950, she pays 0 in FICA taxes. So she pays 0 in FICA taxes up to that $37,950. Again, it's just one of the rules. I promise I didn't make them up. This is beyond my scope of understanding, but I can do the math part. However, from $60,000, so from $37,950 up to $60,000, she will have to pay some FICA taxes. So let's figure out what that chunk of money is. And I did the math and I got 22,050. So this is what she'll have to pay some of those FICA taxes on. And you'll notice on the back side of this sheet that it says 15% for all income in higher tax brackets, except the highest 39.6%. So what they mean is this amount of money is taxed at, 15%. So multiply those to figure out, okay, 15% of this is equal to 3,307 and 50 cents. So those are her FICA taxes. So we're going to take this and add it together to find Josephina's total tax bill. Go ahead, add it together. Use your calculator. Her total tax bill is $14,046.25, and that should be it. All right, so that's it for 4E. Hopefully you guys are all doing well. I hope you're all staying healthy. I have a little scratchy throat thing, but I'm fine. I emailed you about the rest of chapter 4. It's all due on, depending on what class you are, either Thursday or Friday. I emailed you about the test, which again, depending on what class you are, is either Thursday or Friday. And the written assignment is due either, either Wednesday or Thursday, depending on what class you are. I emailed you with all that information. Make sure you read through it carefully. I tried to highlight what's important and get all that. If you have questions, best way to contact me is by email or text. If I don't respond to you in about 6 hours, except for I told you in the email, between the hours of midnight and 9 a.m., that's when I try to sleep, feel free to follow up. You're not bothering me. I am here for you. This is my job. This is what I get paid to do, whether it's in person or online. So let me know if these videos are working for you or not working for you. This is probably how we're going to do it, even if it's not really working for you, unfortunately. The Zoom meetings would be chaos with 30 people in class. I don't think it's going to work. So, but let me know how I can help you. I'm here to help you. I want to help you do well. Stick with me. I'll stick with you, and we'll get through it. We will. I'll try to be as fair as possible. And if you ever feel like I'm not, I hope you would tell me that. Of course, I'm always open to constructive criticism. I hope you guys are well. I hope you have a great day. See you later.